Thanks for staying with us on SABC News. Asian shares on Friday headed for their worst month since the onset of COVID-19, while jitters in currency and bond markets persisted over hawkish talk from central banks, worries about a global recession and rising geopolitical risk. Japan's Nikkei tumbled 2.1%. Australia's resource-heavy shares dropped 1.2%, while Hong Kong's Hang Seng Index and China's mainland blue chips gave up earlier gains to trade slightly lower ahead of the long holidays. Barring a sharp reversal, Hong Kong shares were heading for their worst quarter since 2001, and Chinese blue chips are set to record their biggest quarterly loss since the stock market meltdown in 2015. Let's make more of what's happening in the markets with Patrice Rousseau. He's the CRO at Ashburton Investments. Very good afternoon to you. Thanks so much for your time on SABC News. Quite a week in the markets. Just break it down for us in the US, UK and Asia.
Yes, Tinga, good afternoon and good afternoon to your viewers. I think this week really was one of extreme volatility driven by the UK mini budget. As your viewers would know, we've had a new Prime Minister inducted in the UK, Liz Truss, with a new Chancellor of the Exchequer, and their proposal to cut taxes in an environment where the whole world was busy really tightening up their belts was not well received by the market. So that led to a meltdown in UK, the UK bond market, where UK gilts really went into free fall. UK bonds lost about 30% in the month, and that led to a bit of contagion effect around the world. So we've seen bonds selling off globally across a number of regions, and that forced the Bank of England to intervene in the market, buying bonds in the market, going back to the old playbook of basically getting printing money to intervene and stabilize markets that we've seen after COVID, that we've seen after the financial crisis, the global financial crisis. So I would say there's been concern that central banks might be getting it wrong, and that emanated, the epicenter of that was the UK and the Bank of England, and that started to have the contagion effect. Although we've seen central bank intervention, there's been coordinated action, and markets today, which is quarter end, seem to have calmed down and posting some positive gains after a really tumultuous week, as you already mentioned.
Patrice, when it comes to international company news, the Bank of America changed their rating for Apple. What does that mean, and what did that do to the tech giant's share price?
Yeah, that's maybe a bit of a surprise in the sense of Apple has been the mainstay really in terms of driving performance from the NASDAQ, and the downgrade from a buy to a neutral rating really is indications that there are concerns that going forward, Apple products will not be as in demand as much as they were before, and already we've heard that Apple would be curtailing some of their production expansion plans as a result of that. As you would all know, Apple products are really premium products. They're very highly priced at the top end of the market. The driver of demand in the last year or two has been emerging markets, and especially China. And China being now really on the back foot, and the Chinese consumer really taking some strain, I think is having an impact in terms of the demand for Apple products.
Someone has also had a change credit rating locally, Woolworths. What's happening?
Yeah, again, I think in terms of Woolworths, like many of the consumer shares, I think taking more of a knock on the clothing side. I think there's been a lot of down trading, but even in the food business where Woolies, that's been the mainstay of Woolies, we've seen competition upping their games, especially from Checkers, and Woolies really missing the boat a little bit on the online offering, with 60/60 really from Checkers really hurting them at the top end of the market. So a bit of a downgrade, but I would say symptomatic of the South African consumer coming under pressure and likely to downgrade in terms of being more promiscuous with their shopping going forward.
When you look at the week, Patrice, what were the big market movers for you? And when we look ahead, what are we looking out for?
So if you look at the JSE, I think there's been a lot of news flow. We've had extreme volatility in some share prices. If you take Capitec, which released results yesterday, the share price prior to results was up 5%, then fell 6% on the back of results, really more driven by the fact that despite customers, the number of retail customers climbing to 19 million, which is more than double most of the other retail banks, the issue has been a huge increase in bad debts and I guess concern of a slowdown from the retail customer. Also, quite evident has been a bit of a spike in the platinum prices, concerns that there would be a ban in terms of import of metals, precious metals from Russia, and this would impact especially the palladium price. We've seen a number of these names being pushed up. Amplats was up 15% for the week, Implats 4%, Northern 3%, and SSW 16%. So they're a bit of concern. That's also pushed up the precious metals. The weaker rand has also favored some of these more geared leverage stocks. And your question about next week, I think once we into the new quarter, I think there will be a lot of rebalancing, and the news flow will focus again on the Federal Reserve and the path of interest rates in the US and in the developed world. And unfortunately, at this point in time, inflation numbers are still hitting record highs. We've had the German inflation CPI number released yesterday, which is above 10%. I cannot see any good news on interest rates until inflation in the developed world starts to roll over quite decisively.
All right, Patrice Rousseau, the CIO of Ashburton Investments. Thanks so much for your time, insight and analysis into what's moving the markets.